Dear students, I welcome you once again in the lecture series for the subject Financial Accounting for semester 1. In the last lecture, we have seen the unit 1 which was related to basics of accounting. So in those lecture we have learned what is mean by accounting, how it is advantageous, what are the objectives, as well as also we have discussed about branches of accounting and accounting standards, concepts, conventions, etc. So from onwards we are going to discuss some new chapters. So today we are going to start a new chapter, that is unit 3rd of the syllabus of Shivaji University for BCom 1 for the subject Financial Accounting. The title of the unit is Consignment Accounts. Myself Dr. Supriya Chowgule from DRK College of Commerce, Kolhapur. I welcome you once again for the lecture. Let us know about the word consignment. The person who sells goods is called as consignor or the principal, and the person to whom the goods are sent is called consignee or agent. The goods so sent are known as consignment. Very often, a manufacturer or a wholesaler appoints agents in different parts of his own country or in foreign countries to sell his goods on commission basis on his behalf and at his risk. The sender of goods is called as consignor, and the person to whom the goods are sent is called as consignee. In other words, a consignor and the person to whom the goods are sent is called consignee. A consignor is an owner of a goods and a consignee is an agent of consignor. Thus, the relation between consignor and consignee is that of principal and agent. Consignment is a dispatch of goods by the consignor to the consignee for sale on commission basis on the risk and account of consignor. It is not a sale by consignor or a purchase by the consignee. As such, the ownership in the goods dispatch does not pass over to the consignee. The ownership of the goods remain with the consignor and the sale proceeds belongs to the consignor. In a sale transaction, the ownership of the goods sold passes over to the purchaser immediately on the purchaser of goods. As the goods are sent by the consignor, he calls it as outward consignment, and as the goods are received by the consignee, he calls it as inward consignment. So, this is what called as consignment. In consignment, sale to the agent is not made, but the goods are sent to the agent for sale on behalf of the manufacturer. Now we are going to see the difference between consignment and sale. Let us have some points. The first point of difference between consignment and sale is ownership. In consignment, ownership remains with the consignor, but in sale, ownership transfers to the buyer from seller. In consignment, there are two parties, namely consignor and consignee. In sale, there are two parties, but seller and buyer. In consignment, relationship between consignor and consignee is of principal and agent. But in sale, there is a relationship between seller and buyer. In consignment, sale is made because commission is the motto. In sale, the sale is made for receiving the price from the buyer. In consignment, all expenditures are bear by consignor. In sale, expenditure are borne by the seller. In consignment, account sales is to be prepared for the detailed information regarding the goods sent to the consignor and the amount received, goods sent by the consignor to the consignee and the sale proceed received. In sale, such account sales is not required. So this is what the difference between consignment and sale. The modern world is a world of competition. The production is on large scale. The improved means of transport have developed the markets. They have created world market. As a result, the manufacturers cannot find market for his production at one place only. He is required to get customers for his production at different markets. It is not possible for each and every manufacturer to open his own shop at every place. He is therefore required to find out local traders at different places to sell his goods. The local traders know very well the position and trend of their markets, and they can inform manufacturer to that effect to enable him to make necessary improvement in his production or to reduce the prices, etc. The local traders at various places will not come forward to effect outright purchase of goods for various reasons. Under the circumstances, the manufacturer or the wholesaler finds it convenient to appoint agents at different places to sell his goods on commission basis. So far as the agents are concerned, they are required neither to raise and invest capital nor to bear any risk. As such, number of persons come forward to take the agency. This is what the benefits of consignment. In consignment, there is no need that agent have to purchase the goods from the manufacturer. The agent needs to sell the goods on behalf of the manufacturer. The benefit which is given to the agent for the sale made by him is commission, and commission will be attractive. So therefore, the consignor, that is manufacturer, also finds it's easy to go through consignment instead of direct selling the products into the market by himself. Some of the important terms needs to be understood prior to solve the problems on consignment. The first term is pro forma invoice. Invoice means a bill or a receipt. A consignor prepares a pro forma invoice. So, pro forma invoice is prepared by consignor. At the time of dispatching goods to consignee and sends it to the consignee along with the goods. It gives full particulars of the goods consigned, such as value of goods, the means of transport, the expenses paid by the consignor, etc. It is exactly similar to the regular invoice, However, the regular invoice indicates amount due from and debited to buyer's account. But the consignee is not a purchaser of goods, and as such, there is no question of showing the amount due from him. Hence, the invoice is sent to him by way of information only. As such, it is called as pro forma invoice, which is different from regular invoice. It is usually furnished to the consignee as a guide to what the selling price should be. Okay, so in brief, pro forma invoice is prepared by consignor. Consignor means manufacturer or owner of goods. So, providing detail of the goods which are sent or consigned to the agent are provided in the invoice, but the amount due from the agent is not mentioned as agent has not purchaser of the goods. Therefore, this invoice is called as pro forma invoice. On receipt of pro forma invoice, the consignee may remit some amount to the consignor as an advance, either in cash or by accepting a bill of exchange. It is a sort of security against the goods received by the consignee. This advance is later on adjusted against the sale proceeds due from consignee. Now we are going to understand another concept, that is account sales. At periodical intervals, the consignee submits a statement known as account sales, which gives the details regarding sales made by him, expenses paid by him, his commission and the amount paid by him, and the balance due to the consignor, etc. So, account sales provides details from the side of the consignee. Consignee means agent. So, whatever the agent has sold the goods, the amount received from sales, remaining goods, expenses paid by him, commission payable to him, and the balance which is with him from the sales due to the consignor. All these details are provided in the account sales, which is prepared by consignee, that is agent, and sent to the consignor. Now the third important concept is commission. The consignee is a commission agent of the consignor, and as such he is entitled to receive commission on the goods sold by him as per agreement. Besides the sales commission at an agreed percentage on the gross sale proceeds, the consignee may have additional commissions. Additional commissions are Dale Crader commission and extra commission, or it is also called as special commission. Dale Crader commission is allowed to the consignee to bear the loss of bad debts, if any, arising out of credit sales effected by the consignee. If suppose the agent, that is consignee, sells goods on credit basis, and if there are bad debts, then in such a case commission that is del creditor commission, is allowed to him. In the absence of this commission, the loss of bad debts is required to be borne by consignor. This commission is calculated on total sales unless it is specifically agreed to calculate it on credit sales only. Now, second commission is extra commission or special commission. In order to motivate the consignee to sell the goods at maximum possible price, this commission is given. This commission is given on the sale proceeds exceeding the invoice price of the goods sold. Suppose sales price is rupees 20,000. Invoice price of the goods is 15,000. The consignee is to get commission at agreed percentage on rupees 5,000 in addition to his normal commission. That means if he sells goods at the given price, then he is entitled to have normal commission. If he sells goods above given or prescribed price, then he is entitled to get special commission, that is extra commission. Now regarding valuation of the closing stock. In consignment, closing stock is valued at with the help of this equation. In order to arrive at a profit or loss on consignment, it is necessary to value unsold goods, that is stock laying with consignee. The general principle that the stock is to be valued at cost or market price, whichever is lower, is followed here also. But here cost does not mean only original purchase price, but it means the original purchase price plus proportionate amount of expenses incurred by the consignor and proportionate amount of non-recurring expenses such as freight, carriage, clearing charges, custom duty, dock dues, loading and unloading charges incurred by consignee. The recurring expenses are godown rent, insurance, advertisement, salaries of salesmen. General expenses are not considered here. While taking the proportionate amount of non-recurring expenses of consignee, the proportion of closing stock to the goods received by the consignee is to be taken and not goods sent by consignor is to be taken. So, the formula to value the closing stock is mentioned on the screen. Cost price of goods unsold or closing stock. Add proportionate recurring expenses incurred by consignor, proportionate non-recurring expenses incurred by consignee are added, and the total is considered as valuation of closing stock. Now, let us have some discussion over which accounts are to be prepared in the books of consignor and consignee. The consignor maintains consignment account, consignee's account, and goods sent on consignment account in respect of his consignment transactions. Consignment account is maintained for each consignee. It is separately maintained for each consignee. It is nominal account and is in the form of trading profit and loss account. This account is opened to ascertain profit or loss on consignment. The balance on consignment account is profit or loss on consignment. The credit balance indicates profit whereas debit balance indicates loss. Profit and loss shown by consignment account is transferred to general profit and loss account of the business. Second account is consignee's account. It is personal account of the consignee. It is credited with a bill or cash received from consignee, the expenses incurred by and commission payable to consignee, and is debited with sale proceed of the goods sold by him. It shows the amount due from or to be to the consignee. The third account prepared by consignor is goods sent on consignment account. It is real account. It is credited with the value of goods sent on consignment and debited with the goods returned by consignee, if any. The balance of this account is transferred either to purchases account or to trading account. And in the books of consignee, consignor's account is to be prepared. The entries relating to the consignor and the transactions are mentioned in this account, that is consignor's account. Thank you very much. Today we have learned introductory part of the consignment account. Today we have discussed the meaning of consignment. Consignment is different from sales. Consignment means a dispatch of goods from owner or manufacturer to the agent. The sender of goods is called as consignor and the receiver is called as consignee. He is the agent. We have also seen the important terms relating to the consignment, and the different part was valuation of the closing stock and how the formula is to be used, which accounts are prepared in the books of consignor and the account to be prepared in the books of consignee, and the type of commission. In the next lecture, we are going to discuss the specimen journal entries to be required to be passed in relation with the consignment in the books of consignor and in the books of consignee. Later on, after the discussion of specimen journal entries or knowing the journal entries and its procedure, then we will solve the practical problem on the consignment. If you have any queries or question, you may post in our group. We will have a discussion on the same. If you feel any difficulty, please 2 to 3 times again watch and listen the same lecture. Thank you very much. Stay connected. Bye.